Good morning. Thank you for having me. My name is Doug Hodges. I'm with Phoenix Crypto. Before this, I've worked in the title field and I've worked as a real estate agent. So I got in the industry back in '98, so again, also 20 plus years experience. And then about 9 years ago, I got into the crypto side of things. And for several of those 9 years, I was still working at a title company, so I actually was kind of running a business at the same time, or day job, night job. And a few years ago, I went full-time on my crypto company. My crypto company actually does crypto ATMs, and if you're not familiar, to buy crypto, there's different ways to purchase, sell crypto. You can do it online. What I supply are the machines. Like if you go into a convenience store or somewhere into a shop, and you actually purchase Bitcoin or sell crypto at a kiosk. That's what my company currently does, but with my background in real estate, I am now looking at doing education, as I'm here today, and possibly getting into filling a role that you guys may need and that may be coming up in the future within the industry. So the handouts I gave you, they're just duplicates of what the slides are here. Feel free to use them for notes and whatnot, but for the most part, anything in there is going to be up here as well. So let's get into blockchain and real estate. And you'll hear a lot about why I'm so excited about this, but let's start with the basics. Look at what is cryptocurrency. I'm sure there's going to be varying degrees of knowledge amongst you guys and your experience. Some of you, anyone here own crypto? Raise your hand if anyone already owns any crypto. Look at that, perfect. A lot of these things, being a new technology, difficult to define. So I'm going to do my best here to use it, explain some of these things in plain language. One way to define cryptocurrency is think of it as programmable money. So what I like to think is, if you think of the analogy to email, think about when email came out, it was a digital form of writing letters, right? And you could look at email as almost like programmable mail. So what I mean by that is you could begin to apply rules to it. I mean, I'm sure some of you have used features within your email. You can set a rule that says, hey, if an email comes from a certain company or from a certain individual, send it to this folder. Organize it. Set a rule where you could send one email out to a large group of people, which makes it easier to do than sending multiple pieces of mail. So by digitizing, you're able to start to set rules. And so crypto kind of does that for money. And I'm saying money, but you'll see in this presentation, and I also talk about how cryptocurrency is so much more than money. Another way to describe it would be like cash for the internet. So when I say cash, I mean physical, literal cash. And that's an important feature, an important factor. Because if you think about it, there are definitely some major advantages to physical cash over what we're used to in the credit card, using credit cards. For example, I'm sure at some point some of you guys have gone into a shop somewhere and seen, like a sign, if you're using credit card, maybe no purchases under a certain amount, or there's a 30-cent fee or some kind of fee added on. And that's because it's not free for the merchant to accept credit cards. A merchant is always going to prefer to accept cash because they're not paying a fee on that. So you can think of cryptocurrency as handing over the digitized version of handing over cash. And the reason why that is, even though it is digital, because a lot of people say, well, what's the difference between cryptocurrency that's digital and a credit card is digital? Well, cryptocurrency is much more like physical cash because it is a push transaction as opposed to a pull transaction. So in other words, if you use a credit card, every time you swipe your credit card, your information is sent through the network and goes through up to 7 different parties before where it starts from your bank and ends up in the merchant's bank in the end. It may touch 7 different parties in that process. And we wonder why credit card fraud and identity theft is so problematic. It's every time you swipe your card, you're handing over your credentials to your money, to your account, to the other first person so they can pull the transaction from you. Cryptocurrency, like cash, if I hand you a $10 bill for an item, that's a push transaction. You know, I can't turn around and I can't call Visa, MasterCard and say, well, I never received the product, or, you know, the only way you're going to get your money back is if you go to the merchant and you've got your receipt and you mutually agree that you've got the receipt, you know, they've got the money, then, and you can do that. Cryptocurrency is the same way. You can't reverse a transaction after the fact, and that's why it's important and why it's going to be a big thing for merchants, because of course they're going to love that because of the reduced fees and reduced fraud and chargeback. You know, they say it's usually around, if anyone's ever used PayPal or accepted credit cards or whatnot, it's around 2.7 to 3% per credit card transaction. But for retail businesses, they say once you factor in the costs of fraud prevention, upfront prevention, and then dealing with chargebacks after the fact, it's actually closer to about 10% every time you accept a card. And for some retail businesses that are low margin business, that's a significant chunk. Another thing that makes it different is if you look at comparing it to credit cards. Credit card, you have 2 systems. You've got basically the rails, which is the Visa, the MasterCard network, these entities that are processing. And then you've got the currency, which is the US dollar. They're 2 very separate things. Cryptocurrency is the payment system and the currency all wrapped in one, which again adds efficiencies. Another way I like to describe it is to say that cryptocurrency is to value what the internet is to information. So when internet came out, many of the first usages was just very simple message passing, you know, i.e. what you could call email. And so we know now the internet does not equal email. But in the beginning, when you have a new technology, a new way of passing information over a network, what is one of the most obvious use cases? Which would be sending messages, message passing, i.e. email. And so indeed, you saw email was the first most obvious use case for the internet. But over time, we realized that the technology itself was capable of so much more, and we saw the expansion of the internet in general and all the different services, products, and technologies that came out of it, like the web, blogging, video chat, social networks. Many of these things we couldn't have even dreamed of when it first came out. I like to think of cryptocurrency in the same way. I use money. I say cryptocurrency is money loosely associated, but it's kind of the same way. Money is the first most obvious use case when you have the ability to transfer value over a network. And when I say network, I mean literally over the internet, over the entire globe. So indeed, that's what we've seen. Money has basically been the first use case for things like cryptocurrency. But in the same way, like with the internet, we saw all the different technologies and the different ideas that sprung out of that technology. You're going to see the same thing. Crypto is so much more than money. We're seeing tokenizations, which, you know, some of these are going to be, you know, terms you may have never heard before. I'm not going to go into definitions of everything, but like tokens, things like smart contracts. Some of you may have heard of NFTs. And again, whatever, you know, whatever we can dream of, whatever we can make of it, in the same way that we didn't necessarily know what things were going to come from the internet. So an important aspect is, you know, what gives cryptocurrency value. It's one of the first questions that come to mind for people. These main things I'm going to list on here are going to be really obvious things, but you'll see things like anything else with stocks and commodities like gold, precious metals, all these things, many of these things apply. Of course, you have to have adoption. You have to have confidence. We know that's how, when the national currencies, you know, we hear, oh, the dollars, that, you know, we know the euro and the dollar reached parity recently. for the first time. I don't know if it was ever, but in many, many, many years, if ever. And so you have them moving against each other. So confidence plays a big factor. And then simply like precious metals or anything else, supply and demand, all these things factor into it. But with cryptocurrency, I like to point out its features. Its features are where it really shines. Of course, all these other things have to be in place for cryptocurrency to have value. But I think the features are really the important factors that really stand out here. And cryptocurrency is decentralized. So you may have heard that term. In easy terms, if you think the best example of that comparison is the internet. There's no warehouse somewhere full of internet that can be seized or bombed. It's not a perfect example, but it is a good example of something that's decentralized. In the same way, the internet works because there's various connected ISPs and nodes around the world, and your computer accesses a global network. It's not one company somewhere. Like, there's no company called internet. In the same way, there's no company called Bitcoin. There's no company called Ethereum or any of the cryptocurrencies you may have heard of. It's a protocol. It's a technology. It's not a company. It's borderless. So being a currency, we're all familiar with national currencies, the USD, the euro, all the different currencies around there issued by a nation. This is not issued by a nation, so it can enable payments and value transfers across the globe. It's borderless. It's permissionless, meaning you can access the network, you can join the network, you can participate, you can buy and sell crypto, all without providing an identity. If you download certain wallets, there are various different types of wallets that will collect information, but it's not required, put it that way. You can download a wallet and have Bitcoin in your wallet within 5 minutes, and you'll notice at no point did you include an email, a phone number, a name, an address. It's just a protocol that uses the internet to transfer value across a network. It's uncensorable. Bitcoin doesn't care what you do with it. We all know countries love to step in and say, we're going to regulate and restrict this type of usage of your money. What's our money? You can spend it on this, you can't spend it on this. Bitcoin doesn't care what you do with it, and it's going to be uncensorable by any regulator, country. It's private. I mentioned not necessarily having to include an ID when setting up an account, but at the same time, when you're transacting over the network, if you look, the transaction is actually transparent. You can see every transaction that's ever occurred on a crypto network. We'll use Bitcoin as an example. You can look at the blockchain and see every transaction that's ever occurred. What you'll find out is that there's no identifying information. You can see this balance transferred from this wallet to this wallet here on this date, but there's no identities tied to either of those. Irreversible, this is like we talked about with the cash. That's a huge deal. Imagine what the potential is for enabling global, cross-country, global payment systems and bringing second and third world countries into global commerce that are not currently participating. Approximately 5 to 6 billion of the people in the world are unbanked or underbanked. So this has global implications that is far beyond just the United States. We have it very good. Most of us have very easy access to banking, but a lot of the rest of the world doesn't. So imagine if you open up the ability to shop on Amazon or any of the large networks without a bank account. So it's peer-to-peer. Again, when I mentioned the credit card processing, how your transaction, your information may pass through 7 possible entities, possible companies in that process. Peer-to-peer is a real-world example of when I hand that $10 over for an item at a merchant, that's a peer-to-peer transaction. It's not going through any other party. So Bitcoin and crypto is the same way. Your value transfer is going from your phone, if you've got your wallet on your phone, but basically from you to the other party without going through additional parties. Along with the supply and demand there, Bitcoin and cryptocurrency, you'll see I interchange those words frequently. Bitcoin was the first and is the largest and most robust network. So we'll use Bitcoin as the example. Bitcoin is limited in supply, and the important part is provably so. Because of the way that the code was written and the technology works, it's open source, and anyone who's smart enough to read code and audit code can look and see that it's provably scarce, meaning the limited supply that's issued. No one can go in, covertly and change a few parameters and just all of a sudden create more Bitcoins for themselves or just in general for the network. And we'll go into a little bit into the mechanics of kind of how that's possible. It's relating to the blockchain. But again, with the irreversible peer-to-peer instant transfers as well. When you swipe your credit card, you think of it as instant because you're getting your item right away. But that money's not ending up in the merchant's account it's better now than it has been, many years ago, where it was maybe 2, 3, 5 days. You're probably going to get settlement within a day. But with Bitcoin, you're talking about settlement in 10 minutes or less. And of course, low fees. So this is huge. When I say low, I mean almost insignificant. If I transfer you $5 in Bitcoin right now, I'll probably pay about 15 to 20 cents. If I were to send $10 million over to China, someone in China or anywhere in the world, right now it costs me about 15 to 20 cents. It wouldn't be any different. Blockchain is one of the hardest things to describe, and so I'll do my best to kind of do like the 10,000-foot view. But like the internet, it really is just a technology. It's a protocol. And I use the example like TCP/IP for a reason. Some of you may have heard the idea what TCP/IP is, but it's one of the underlying technologies that powers the internet. Okay? Do we need to understand how TCP/IP works to be able to utilize the internet? Of course not. It's kind of the same way. It is a protocol, and a blockchain is the rails and the protocol that allows the network to work. Now, of course, if you're nerdy like me, you can only sit down, for 20 hours a day for 2 weeks when you hear about Bitcoin and just deep dive and learn everything you can about it. But it's absolutely not necessary in order to just simply use cryptocurrency. Another way, it's just a fancy transaction ledger. There's one comparison I don't really like, but for lack of, haven't really come up with something better. It's kind of like a really advanced Excel spreadsheet. And the difference being that everyone has access, but no one can simply add a row or change a previous row. One of the features that I didn't quite put in there, but that I could have, is immutability, meaning prior transactions cannot be edited, changed. It's essentially in stone. Once a transaction is done, it's immutable. It's not going to be changed. And same thing with adding a transaction. No one can go in and add a line and just simply give themselves more crypto. The spreadsheet or blockchain is updated every time I send a transaction from myself to another individual or between two parties. And that's because the blockchain or the network collectively looks at the transaction. It looks at the blockchain. When I'm trying to send a certain amount of Bitcoin, it looks at the blockchain, confirms that I even have that by looking at prior transactions in the ledger, confirms that I have it, and that the phone wallet I'm using follows the rules of the network and transfers it to the new person. Everyone looks, confirms the information contained within the transaction, and agrees, okay, this follows the rules of the network, follows the rules of the protocol. He has the Bitcoin, and collectively thousands of nodes around the world are all looking at it saying, okay, yes, I approve, I approve, I approve. And because it follows all the rules, all of the nodes approve it, allow it, and, you know, so to speak, add a line to the spreadsheet. So this one, a little more wordy, but it's a decentralized mechanism for preventing double spends. All that means is the reason we have these banks and institutions, one of the main reasons, is to simply prevent double spends. To look at your balance and say, this person, here's this person's balance. He can't spend more than he has, but also that once we have spent any of our balance, we couldn't spend that same balance again. You have to have the spreadsheet, the transaction ledger, that everyone can audit and look at to confirm. Well, traditional finance, banking, and our current institutions, you have to have a central entity that maintains that. So your bank has a ledger, and in your financial institutions, they all have a ledger that can go back and look and say, okay, this party has this balance, and he can spend it. He can only spend it once. So this is a way of doing that without a third party, and that's huge because how much does it cost the consumers in fees and to have full-blown institution with a few lines of code, you can completely eliminate an entire industry. You can also look at it like a chain of custody. And so the blockchain, now I put that in quotes for two reasons, because obviously we have the term blockchain, but I also put it in quotes because Teresa will be able to answer, but I'm sure some of you will as well. Where do we hear that word chain in the real estate industry as well? More so the title industry, but you have a title chain. And so what is it? It's a history of transaction that needs to be linked. You need to be able to go back and say, okay, we know this person received the property from this individual. That's verifiable. This person received it from this person, and you have a chain that links and goes back, you know, as far as the recorder's office goes, or as far as you have recording of deeds. Blockchain is the same way. It's a chain of block. Now, a block is just simply just a big batch of transactions that gets processed like on a regular, every 10 minutes. But on a regular, every 10 minutes, all the transactions that were initiated in the prior 10 minutes get grouped in a big block and it gets added to the chain. And that's when it's added, that's when we consider it's basically written in stone. It's not going to be changed or modified in any way. And that's how we can prove this person has this balance. This person is allowed to spend the balance, because you can look at you could go back and follow the chain all the way back to the very first Bitcoin transaction that was done in January 3rd, 2009. So blockchain, when I say that cryptocurrency is the payment system and the currency all in one, the blockchain is what you consider the engine, the payment rails. It's the payment system. And I put engine in quotes for a reason, because another example, just like I used with TCP/IP. I'm not a mechanic, but I can get in my car. You know, I don't know how to fix my engine, but I can get in a car and I can get from point A to point B in it. I can utilize it without knowing how it works under the hood. Bitcoin is the same way. A lot of people get hung up on wanting or needing to understand all this stuff about blockchain and how it works. But you don't need to know all that just to simply utilize the network. One of my aha moments when I'm teaching people about crypto, I will often quickly try to gravitate straight into, here, before I go long-winded for an hour on you, how about you just pull out your phone, I'll have you download a wallet, and I'll send you $1 or $5 or something in crypto, and instead of talking for an hour, within 2-3 minutes, they have an aha moment. They've downloaded the wallet. They didn't put an email address or a phone number at it. They got the wallet installed in 60 seconds, 2 minutes tops. And 60 seconds later, I've sent them a crypto transaction. They're looking down, and they've just joined the world's newest global financial system, and it took 2 minutes. And it's a powerful aha moment, and they've just used crypto, and they now have crypto in their hands within 2 minutes. They don't have to know anything about how blockchain works. So let's get into why blockchain in real estate. Well, I like to ask a different question, a better question. Why is it taking so long? Of course, I'm an early adopter of crypto, so coming from the real estate world and then learning about crypto, one of my first thoughts was, oh my God, this could be used in just about any industry, but in real estate for sure. And so my attitude is, why is this taking so long? You know, as opposed to why. But we will get into a little bit of why blockchain for real estate. Very simply, efficiency and automation. Has anyone been in real estate long enough to remember when the industry kind of went through a whole transition of going paperless? Well, I'll tell you a funny story. I was selling real estate during that time, and I was working in an office with this was around 2005 or so, I think, where most of the agents were older, and many of them had struggle, and I actually supplemented my income for months, maybe a year, a couple of years possibly, just simply consulting and going into realtors' offices or making appointments with realtors, consulting, literally charging them to show them how to scan a piece of paper and turn it into a PDF and how to attach it to an email and send it off. And now we look back and we laugh and we think, it's kind of trivial now, but at the time it was so new that people just couldn't wrap their heads around it. It's kind of the same thing, and so I say that also to kind of just convey the idea that this is not necessarily that scary, and it doesn't have to be that scary. Large ships move slowly, if anyone's ever heard that term. So anytime you've got a large industry adopting new technologies and new ways of doing things, it often does take time. And so that's why I say, if you look at all of these aspects of the industry, contracts and paperwork, title chains, title reports, loan applications, approvals, escrow's role of accepting, storing, distribution of funds, the recording process, and all the man hours it requires to pull this off. Every single one of these is cumbersome and inefficient. And crypto can potentially improve all that. I'd like to also say, just like with many other things, this change, this evolution into new technologies going into new waters, this is not going to happen overnight. This is going to take, Bitcoin's 9 years old. It's just barely getting into the conversation within real estate, okay? All these things are these are very slow-moving progress on this. So let's look at a few types of scenarios to dive right into really, what are we looking here? What is this going to look like in practice, cryptocurrency being involved in the real estate industry? First scenario, I'm going to say, is very unlikely and you probably won't come across it. Doesn't mean you won't, but coincidence of wants, it's an old term from the creation of money. One of the reasons money was originally created was because before money, if you go to, let's say you go to the market and you've got a chicken and you need a cow, you can't trade a cow for a chicken, and you can't subdivide those into, and so you needed a medium of exchange, okay? And that's where money filled that role, to be a medium of exchange. Instead of trading the actual good, you have the medium of exchange. So a coincident wants in this usage is this scenario that you unlikely to see, but you may, would be if, I think a lot of people are thinking that buyers are going to come in and want to buy a home with crypto, and then the seller's going to have to take crypto. Well, that's unlikely to happen, and I'm here to tell you it's probably not going to happen, and it doesn't need to happen. a buyer can use crypto and the seller can receive US dollar in the end. Same thing in reverse. The buyer can pay for the home in crypto, or sorry, the homeowner can sell the home and actually receive crypto from their proceeds, but the buyer paid in cash. So, yeah, buyer using Bitcoin, seller receiving Bitcoin, kind of the scenarios I just mentioned. So I like to use the analogy of if I walked into a real estate office or a title company, and I plopped down a brick of gold, and I said, here's my down payment. The title company is going to say, what do you want me to do with that? I can't do anything with that. Okay? So you need an exchanger. It's really no different. And often when I'm teaching about Bitcoin and cryptocurrency, whether it's in real estate or other industries, I often say, if you have a question about cryptocurrency, very often, if you take your question and substitute the word Bitcoin or crypto with the word gold, you'll often have your answer. You can almost call Bitcoin gold 2.0 or digital gold, because it shares so many of the same properties. So in the short term, title companies, escrow companies, for escrow and for receiving, they're going to need an exchanger in the same way. If you had your gold as your down payment, you have to go to a broker, and they're going to have to exchange it for US dollar that the title company can take. So in the short term, I think that's what you're going to be seeing in the very near future. Buyers accepting crypto, they're going to need to exchange it to old world money, I call it. Exchange it to old money so that the title company can accept it. In the future, though, just like I said, these things, large ships move slowly. In the future, I think we will eventually see title companies actually holding crypto in-house and maintaining without needing a third-party exchanger. And that, I don't know if that's going to happen, but I'm very interested to see if that's how this plays out. I know right now none of them are going to touch it with a 10-foot pole. It's too complex. You've got liabilities. You're going to have to create a whole new department and new staff that understand it. So let's go talk into a little bit about the financing side, lending and financing side of it. As far as traditional financing, using cryptocurrency in tandem or along with traditional financing like the new loan. Now, if there's no loan involved and it's full cash purchase, then you've got no problem, no issues at all. The lender's not involved. The big thing there is the sourcing of funds and funds being seasoned, right? If you're not paying full, if you're getting a loan and your crypto is either a down payment or just closing costs or whatever, title company, or I'm sorry, the lender, the underwriter is going to make sure that money is seasoned. So it's going to be interesting to play out. I don't know the answer to this, and we'll probably find out soon, but I'm wondering what the lenders and underwriters, how they're going to treat cryptocurrency or sourcing of funds that from crypto, if they're going to need to be seasoned or not. What I mean by that is, we all know, like, if you sell a house or sell a boat or something, the underwriter, they may accept your bill of sale for that item as source of funds, and therefore it doesn't need to necessarily be seasoned and sit in your account for 3 months before you start the loan process. But other times, depending on where the source of funds, they say, well, this just came from nowhere on 2 days before close of escrow. We don't know where this came from. This money's not seasoned. It hasn't been sitting in a bank. I'm sure some of you run into that problem before. So it'll be interesting to see how underwriters treat this. For example, when I mentioned I'm doing other projects within the real estate space, one of the things I'm looking at doing is becoming an exchanger for the real estate industry, being that exchanger, that broker that the buyer or the seller will need to convert their crypto to old world money so the title company can take it. And we'll find out. I'm not sure if they will take my paperwork as the broker and say, look, the source of funds is the party sold crypto on this date here's where it came from, bill of sale, so to speak, and they say, okay, no problem. Or they're going to say, no, we see that they sold crypto, we see that you have documentation, we see you have a receipt for it, but it needs to be seasoned, it needs to sit in the account for a few months before. So I'm not sure how they're going to treat that, and it'll be interesting to see what they do. But to get into some more out of traditional financing into what's getting a lot of buzz right now are these crypto collateralized loans. So think of it like this. Rather than, let's use the gold bar example. Rather than bringing your bar of gold and sitting it on the desk of the title company, take your gold and actually get a loan, a collateralized loan from a third party. You could probably consider it a hard money loan, but collateralized. And then you're not actually selling your gold. Same thing with the crypto. These collateral loans are popular because everyone knows the whole mantra in crypto is who wants to sell. Everyone wants to stack. Everyone wants to acquire because we think it's the future. So who the heck wants to sell? So this is really appealing to a lot of people if you can actually hold on to your crypto. And let's just use a down payment example. You need a $20,000 down payment. You can park your crypto without selling it with these lenders that are popping up all over the place, and they'll loan you the $20,000. You keep your crypto. Now you've got $20,000 to put your down payment on. And then later, how you deal with that loan, if you pay it off slowly, however you want to do, you get your crypto back. That's very appealing because, number one, you don't have to sell your crypto, but the big buzz, what a lot of people are talking about, the potential tax advantages. I'm not a tax person, but I'll tell you what the reason for the big buzz is. The concept is whenever you sell crypto, gold, or any commodity stocks, anything like that, you have a capital gains taxable event. Okay, if you bought your one Bitcoin for $20,000 and you sell it for $25,000, you have $5,000 capital gains tax event. Well, if you do a collateralized loan and you're borrowing the $20,000 for your down payment, you don't have a taxable event. You haven't sold your crypto. So that's very appealing, especially, I use the example, if you bought it for $20 and sold it for $25, but what about the people that bought it for $100 and sold it for $60,000? So that has massive implications. If you've been holding, if you were an early adopter and it's just been sitting in a drawer or on your computer at home for years, and you just watch the value climb and climb, well, now you've got a $59,000 capital gains tax event. So it's significant. Also, I skipped over, but new industry-specific lenders, crypto lenders. Now, these aren't necessarily the collateralized loans. They can be, but there's only one that I know of. But I know that others are popping up. This Milo Credit or Milo something. They have already kind of set up their company and their processes to fully integrate and understand Bitcoin, so you can use it as your down payment. They understand it, and their business plan, their business strategy is to really serve the crypto community. So you've already got people moving in this space on the lending side, and also on the title side. There's a title company, and they are licensed in Arizona, and they're already operating here. That in the same way. Can accept crypto directly at the title company. Remember when I said in the future title companies may be holding their crypto in-house? This title company is already doing that. So we're already seeing some of these things happen. And again, like I mentioned, that's just kind of repeating of the same sourcing of funds. Sourcing and seasoning are two issues that are going to have to be addressed. We'll see how the industry treats it.
Would you be able to go back?
Sure.
So I can kind of, I don't know if this is good or not, okay, but I'm just going to.
Yes.
As a lender, when they take a loan application, so this is why I love the class, because remember, the more we educate ourselves, the better we're able to help our clients. And usually when we get connected with a client, we ask, well, as a realtor, we don't have to, right? That's the job of the MLO. But usually I always ask, well, most of the questions that the lender will require, have you been working for the past 2 years? Are you currently working? Where is your down payment coming from? Those are questions that as a realtor it's good to know and it's good to ask, right? So let's go and say that you're asking where is the down payment coming from? And usually they'll tell you it's under the mattress, in the piggy bank, right? with the aunt, with the relative, right? Or I don't know, deep in the hole. That's how some people will tell you, right? Oh, so it's hidden, right? So I believe that from now on, we should be asking our clients, do you guys have Bitcoins? Do you have crypto? Because when the loan officer takes the application, they ask you for evidence of where the money's at. And I'm assuming, or that would be a question.
Yeah.
When you have crypto or Bitcoins, do they get like a statement of how much Bitcoin, how much currency they have?
When you're logged into your wallet, you can see your history. That's how you can season the funds. Because the wallet will show how long he's been holding the crypto for.
There you go.
So it's like a 401k.
There you go.
If the lender transfers, the lender might ask the client to transfer the Bitcoin to their bank account in order to take it as a down payment.
Yes.
Because it has to be converted into dollars.
Yes.
But it will come from the crypto wallet and
There
it
you
will
go.
show the crypto history and the seasoning for the 90 days.
So that would be the evidence for us that we're out there and we have clients that have Bitcoins and crypto. That would be the evidence that most of the lenders will require. Where is the money coming from, right? And that wallet, I'm sure they're able to print that out. That's the evidence. That would be like the bank statement. That would be like the 401k retirement statement that they get. So in reality, all we're doing to our clients is the way business is going is just asking, do you have crypto or do you have Bitcoin, right?
Yeah.
And usually the lenders require 60 days, and if it's a gift, the evidence. So in reality, to me, the way I see Bitcoins and crypto is like another 401k or another CD or a CD, right, where they ask you evidence. So in reality, I believe that the way it is with this, with Bitcoins and crypto is that the only question we should be asking now our clients is, where is your money at? Besides, assuming that it's under the mattress. Because I know people that have over $5 million in crypto, right? And we may think that they don't have it, or we may think people don't have it because it's not in our knowledge, right? But I believe that would be the next question. So the evidencing of all those documents, I believe they're going to be.
It is,
like,
because I can tell you, I purchased a home with crypto, and the title company had no idea. Just like with the bar gold example. So I'm actually an exchanger myself. For myself, it was quite easy to convert it. I didn't go into the title company with my Bitcoin or even to the lender with my Bitcoin. I just converted it all beforehand. But as far as the underwriter, and like I mentioned, they did accept my screenshots of my accounts and my transaction history as my source of funds.
Because what matters to the lenders is evidence. Where is it coming from, right? So as long as you have paper trail, it's called paper trail. As long as you document where it's coming from and it's consistent, it's just your own funds, then it's just another way of putting your down payment.
That's a good example. And then actually that made me think, I wanted to back up here and talk about this that I kind of skipped over and forgot to mention. But like I said, I purchased a home with crypto. I'm the only idiot out there selling their crypto when it's everyone's talking about it going up and up and up. Everyone wants to acquire, no one wants to get rid of it. But I think it's another thing that you guys might not be thinking about that you probably should be. I think the conversation going on out there is everyone thinks, okay, what's coming is we're going to have all these buyers that want to buy homes with crypto. Well, I think the true market, and if you are out there marketing, let's just say, I know there's courses out there where you can add, you can go through and actually add crypto certified agent, you know, to your business card. There's certifications and whatnot that you can that are out there. But a lot of people are talking, or I think are thinking that it's all these buyers are going to want. But I think if you're marketing, and for the title companies and the realtor, because the whole mantra is, the whole idea is everyone wants crypto. No one ever wants to get rid of there because it's going up. I think the real marketing strategy is not to market to buyers, market to the sellers, because those are the guys that are going to be selling their homes and getting proceeds and profits from the sale, and they can accept some or all in crypto or in Bitcoin. Say they've got $100,000 proceeds from a sale, they could decide, I'll take $50,000 in, you know, old money, and I'll take $50,000 in crypto. And it's going to be the same exchanger. If you're going to need an exchanger for a buyer, that same exchanger will be able to do the reverse transaction and work with I'm sure they're going to need to work with the title company to get the proceeds and then convert it to crypto and send it to the seller. So keep that on your mind. I think that's really the bigger marketing play here.
Hey, Doug.
Yeah.
I did recently, I just received, and it's just crazy, but I got this morning from our administration, and it was regarding crypto.
Yeah.
So I just wanted to run this by. So
Yeah.
again, it's about all exchanging. So as a question came up regarding the subject of cryptocurrency, this was addressed several years ago, but wanted to remind everyone of our position as follows. If requested to do anything regarding crypto, we must politely decline, as all underwriters, that's all the title underwriters, no matter what title company you are, they're ones who underwrite our policies, prohibit doing it, and we would be in violation of our underwriting agreements if we choose to do so, even as an escrow only. If you're requested to do any of these transactions and anyone decides to incorporate crypto in the contract after the fact, please do not do it, and if necessary, contact the administration.
Yeah.
So, you know, we can't put that language in there. It would still be something that has to be done with a third party.
Yeah. That's a good point. Like I said, it's for the time being, it sounds like it's going to need to be the way that I did it. Like title company had no idea I was converting my crypto to old money for them. And you may, that may be for the time being. It makes me wonder about that title company that is operating right now. That does.
There must be
I'm not.
underwriting
Yeah.
themselves then.
Could be. Could be.
Yeah.
So a question pops out. So let's say that a client is using a third party and they're selling, and they're getting $100,000, same example, but they want $50,000 in crypto. If they do sign like the wiring instructions, if they get directed the title company to wire half 50% of their proceeds to this exchange, is that allowable?
Yeah, we can wire to an exchange company, you know, like whether it be like 1031 exchanges, anything like that. It just has to be an entity, not into, you know, obviously
Yeah.
you can't do anything.
Okay. So that's where they will get the wire, and then the exchange will send it to their wallet, correct?
Yep.
The Bitcoin, Ethereum, whatever crypto they want to use.
Yep. Correct.
Thank you.
Any questions? Let's look at some of the impacts in the short term. This is what we talked about. This is probably what we're going to start seeing first. Just crypto simply being used as funds. And we're going to go into it in a minute here, just like I talked about how we talk about crypto. The first use case is money, and that's mostly what we've been talking about here. We're going to talk a little bit about use cases outside of directly within the real estate transaction being used as funds and as money. Again, the alternative financing options I kind of went over already. Third-party services, facilitating the crypto transaction. Again, this is just the exchanger. So I've left my card today. I'm just barely starting to get into this. If you have scenarios involving crypto, I do have the ability to exchange crypto to do these exchanges. I'm going to hopefully be rolling out a more formal, more robust side of my business to handle that. But the fact is right now I do have the money service. I am registered as an MSB, money service business, and I am under regulations under FinCEN and those things that are required to be basically to facilitate exchanges like this. And then, like I said, eventually, it sounds like they're resistant to it, but I do think eventually they'll come around, and I think the companies and the businesses are going to start facilitating these transactions in-house. Let's talk about some long-term stuff. We're talking 10 years from now, maybe 20 years. And these are pie-in-the-sky dreams, but they definitely have potential, and I think they could, some of them, maybe some, maybe not all. But because, like I talked about, how the blockchain works, it's just a ledger, a transaction, a provable, immutable ledger, just like the chain of title and the recorder's office and the record keeping that we currently use. You very realistically could see titles on a blockchain as opposed to being recorded at the recorder's office. When I say that Bitcoin and crypto can transfer value in the way the internet can transfer information, it can also store small amounts of data like deeds, copies of deeds, or just the information that a deed would typically hold in digital format. We could see all of the paper contracts that we're currently using be replaced with smart contracts. And without going too in depth on what smart contracts are, it's one of the features. Huh? Yeah. There are certain cryptocurrencies that have come out that their main use case, their main purpose is to have these smart contracts. And so just kind of like I talked about, kind of the example of like how you can set rules to your email. If it comes from someone, it'll go directly into one folder. You could create a contract is just simply, two parties and performance. Okay, so currently we measure and we determine performance by looking, okay, did they transfer the money? Did we receive their check? We deposit it into their escrow account. It's more of a physical and a manual process. But if you roll cryptocurrency and smart contracts all in one, they're essentially self-executing, okay, without need a human to review and say, okay, yes, we received the wire, we received the funds, therefore, we're going to go ahead and record this. We're going to upload it to the recorder's office and complete closing. All of this could be entirely automated without human involvement, where if it's a pure, think 50 years down in the future, but if it's a pure crypto transaction and the contract stipulates that X, when X happens, when funds are transferred from the buyer or whatever, performance is measured by me sending the crypto to the smart contract, right? So I've got a smart contract and I say, okay, I've got my crypto, I owe, for my down payment, I send it to the smart contract. The smart contract instantly takes the escrow to the next step maybe, and it notifies the, maybe the title officer or something that the prelim or the title report needs to be created at that point. So just think of automation and efficiency in the escrow process. This is my favorite one. Anytime we can get rid of a government department, I'm all for it. So I would love to see the elimination of the recorder's office. If you've got provable, immutable records on a blockchain, you don't need a recorder's office. You don't need the legacy title chains that we know of.
I have a question in reference to that. So, it's
Yeah.
innocent question because I have no idea. So, okay, so I understand the whole process and that it will eliminate the recording fact. But how can a client be protected that property doesn't sell in a regular way? That is recorded with American County, because all that is
So blockchains are public as well.
So we have to check in both.
So any person can look at, in this example, if we've got, you know, the title chain, the chain of property chain on a blockchain, any person can look at the blockchain and see exactly, you know, what the recorder's office does or what your title officer does when he goes and before he writes up your policy and issues. They've got to clear up any clouds on title before close of escrow. All these processes. Well, when there's no clouds on title, because they're not possible, because everything must be verifiable, then you've got the ability to, like you said, it's public information, and it's open source. It's open. Anyone can go and look and see. And so it does get into a little bit in the weeds, a little bit of how crypto works. The crypto portion of cryptocurrency comes from the word cryptography. Okay, so cryptography is one of the technologies that it's one of the features or one of the tools that allows crypto to function the way that it does. So, yeah, you have a question?
So, like, my thought is, what you hear about people doing just a quick claim deed, and they don't go file it on the county, but that deed exists. Like, there's going to be situations like that that might not have been reported in the county. That's something that crypto would miss.
So,
right?
yeah, anytime you have this, a new, a complete paradigm shift in an industry, regulation and rules and laws always lag behind. Okay, so eventually there is going to need to be an entire framework of regulations and laws that address all of these issues like this. I'll use an example, and this is kind of amusing to me. This was probably in 2015 or 2014, maybe 2016. Most people in my office when I worked at a title company knew that I was dabbling in doing something with cryptocurrency. And my chief title officer comes in, he comes over to my desk, he comes up to me and he says, "You ever hear of this thing, blockchain?" And you know, he's got industry guy, he's been, you know, 40, 50 years in the industry, right? And I'm like, where did you hear the word blockchain? And I guess he was at the yearly Alta conference, and they had a speaker that came in, was talking about these exact things, replacing titles on the blockchain. And it was just interesting conversation because I said, okay. And then he proceeds to go. And he spends 2-3 minutes saying, the guy did his talk and he starts going, and I raised my hand and my buddies raised their hands and we're like, well, how are you going to address this? And how are you going to address this? And and he was very proud of himself for poking holes in all these. And the fact is, I intentionally said these things take decades to really flush out. When the internet was created, there was, you could consider it like the Wild West in the beginning, right? The laws hadn't caught up. The functionality was kind of janky, and all these things took years to flush out, and and now we have industries built around the internet entirely. And it's the same thing. We don't have the answers to a lot of these questions, but we know progress happens, and very smart people figure these things out.